Okay, everybody. Today we're here. We're going to talk about things mortgage. I'm Keith Kalk with Premier Sotheby's. I am a broker advisor. With me today is Rob Warren.
Hey Keith, thanks for having me.
Tell me a little bit about what you do and where you're at.
Rob Warren with Prime Lending. I'm born and raised here right in Central Florida. Been in lending and banking since 1997.
Wow, so you've been through a lot.
Oh yeah, seen the ups and downs and the in-betweens.
Yeah. Okay, so in this video, let's talk about the different types of loans. FHA, VA, and conventional loans. What are the differences and why would it be good for a person to choose one over the other?
Okay, great question. So first of all, one of the most popular loans I've been seeing a lot more of in this area are VA loans.
Okay.
And VA loans are ideal for a veteran, obviously. They're only available for veterans and their spouses.
Okay.
With a VA loan, a person can get into that home with zero money down for a down payment.
Okay.
And then in many cases I've seen where the seller will contribute towards their closing costs like we've discussed before, and they can technically cover all of their closing costs as well.
Okay.
With those loans, there's no private mortgage insurance, so although they're not putting 20% down, they don't pay PMI.
Okay.
There is a funding fee for many veterans, but in our local area, we see a lot of veterans who have disability from service-connected injuries.
Okay.
If they have a service-connected disability where they're receiving service-connected disability payments,
Okay.
there's no funding fee charged by the VA either.
Wow, that's
So
great.
it's a great savings. So
Yeah.
I do love the VA loan program. It's great for our veterans, people who've served our country.
Okay.
It's real flexible as well as far as debt ratio guidelines go. It's one of the most flexible programs out there.
I know that we'll get to this in a different video, but with credit ratings, the VA is much more lenient when it comes to credit.
Yes, it can be. Yeah.
For a veteran.
Yes. They try everything they can, the VA guidelines, to make it work for the veteran.
Okay.
Yep.
And what about FHA? How would that compare?
FHA is a fantastic program. Many people think of it as a first-time buyer program, but it's not. It's for anybody. The nice thing about FHA is it has the really flexible guidelines for income to debt ratio.
Okay.
I've done as high as 55.9% debt ratio, and that's, most people think you need to be in 36 to 43.
Okay.
FHA is quite flexible. It's also real flexible on credit scores as well. So
Okay.
someone, for example, trying to get into a conventional loan with a 625 credit score should be able to do that, but their pricing will likely be a little better on FHA,
Okay.
and they're able to put 3.5% down payment.
Okay.
It's a popular program for first-time buyers because they can get into the home less money out of pocket.
Okay.
Another advantage of FHA is conventional with a low down payment will limit the seller concessions to only 3%.
Okay.
FHA allows 6% across the board.
Okay.
So the seller can help more if they're willing to.
And you could use those for a variety of things.
Yep.
Okay.
Conventional will be the other option.
Yeah.
And you think of conventional as your plain Jane vanilla loan program.
Okay.
When someone talks about doing a mortgage and they don't know much about the different programs, conventional is what first thing that comes to mind.
Okay.
They tend to think that they need 20% down payment. That's not the case.
Okay.
With conventional loans, a first-time buyer can get in a home with 3% down. So it's actually a little less down payment than FHA.
I didn't know that.
Yep.
That's good to know.
If they have owned a home in the past 3 years, it's a 5% down payment. And then seller concessions are similar as well. If they put less than 10% down, the seller can credit 3%.
Okay.
If they put 10% down, they can credit 6%. If they put, I think it's 25% down, they can do 9% seller credit, which that's unheard of. It's more than you need.
Okay. Okay. And what's the best option for you, for a buyer?
Every buyer is different, Keith. That's the thing. I've done multiple types of loan programs. One shoe doesn't fit everybody's foot, as you might think. Every loan program is different. I got to talk to that customer, find their needs, their desires, look at their credit, their income, their assets, then we'll determine which one fits them the best.
Okay, that sounds great. If you're looking for more information, we have a bunch of videos out there. Take a look at them. I'm Keith Kalk. My phone number is 352-431-8539.
And I'm Rob Warren. My number is 352-552-3384, NMLS number 432395.